The magnification of the economic downturn is entirely correlated to central bank activity. They have ruined the value of money, distorted any semblance of free market forces that were lingering, and ensured that without constantly increasing stimulation, a failure is imminent. In China today, the central bank has been engaging in the biggest stimulus they have ever done. If the economy was doing well, if the stock market was booming, would this be necessary? You came here for the truth, so let me unveil that for you. Well, a lot of people, they don't want to answer that question because their retirement accounts, their 7 shares of Amazon are at risk. They don't want to admit it. Why in the world would you need $15 trillion in stimulus if everything was great again? But of course, it's not that way. We need to understand the truth, and that's why if you're a subscriber on here and you've been watching these videos, you know that we are all about the truth, and the truth hurts. We know that, okay? So we're going to get into that today. We're talking about China. We're looking at the situation right now between the US and them. We're going to look at the stock market also. So let's begin with the markets themselves. You can see right before the end of the day on Friday's trading session, looks like the Dow Jones will end up at about 300 points into the positive. The Nasdaq and the S&P have also done well today. You're looking at the chart on the left-hand side. It has been quite a good day for stocks. There's no doubt about that. But why have stocks increased? Well, the major averages jumped to their highs of the day after sources told CNBC that China had offered a 6-year increase in US imports during recent trade talks. Did you see anything wrong with that sentence at all? Most people, they read that information and they thought this is fantastic. In fact, the algorithms read it and they traded on the information and put this market into the positive territory today. However, there's one key word in here that is overlooked, and that is sources. Sources is fantastic. That's great when you tell who the source is. Who is it? Is it coming from the Chinese side? Is it coming from the American side? Is it somebody in the government? Which department is it? All we have is the word sources. Am I the source maybe? Could it be possible that I'm the source? Well, sure, based on this, but I assure you, I haven't been in contact with CNBC. So that's what they're talking about here. Fantastic information, okay? It's completely irrelevant. If you can't say who it is, you can't trade on that information. That is dangerous. That's ridiculous. Then you have this. China has offered a 6-year boost in imports during its ongoing talks with the US, officials familiar with the matter. What does that tell us? Nothing at all. Officials familiar with it? Is it somebody that was sweeping the floor and he eavesdropped on the conversation? What person is it? Well, I'm not suggesting that this information isn't good to know, but to trade on it is crazy. The market went up based on this. This is how fake these markets are today. It's not people that are doing so, it's algorithms trading on this. They're looking for all the news that seems positive and then they buy. They buy before you buy, I assure you that much. These trade talks are going on right now. We're trying to get some positive news out of it. Obviously, both sides want that to happen. Investors want that to happen. We want the economy to do well, but we want it to do so without the stimulation from these artificial sources like the central banks. But people don't give a damn. All they care about is that their 7 shares of Amazon don't decline. And when they put more in, they want to hope and pray that they didn't just make a mistake. So that's what this is all about. And you can see how angry, really angry people got, particularly in December. If you want hundreds and hundreds of examples, you can just check the comment section on my videos. Lots of examples in there. When you look at the Chinese stock market, you can see how well it has performed. The beginning of this year has been very good for the Chinese stock market. Of course, this is very short-sighted because you can take it for what it has been over the last year. Suddenly doesn't look so good. Over the last 5 years, if we can see back in 2015, May 1st, 2015, the market is down well over 40%. I haven't recalculated it, but it was at 4,600 at this point. I think it was actually higher, but it went down all the way to, we're at near record lows at this time for the last several years. This tells us that the market right now is receiving a bump just like other markets have as well. You can see the US markets. What they need is stimulation. They don't need stimulation from the economy. economy, apparently, all they need is some printed money. Now, the PBOC injected a mass quantity of money into the system over the last few days. I want to see the totals when I can get that data for you, how much they've done so far. This information comes at a time when we have seen a lot of weakness inside of China, and this is going on all over the place. We have witnessed this issue, for example, Foxconn axes 50,000 seasonal jobs as Apple's slowdown bites. Tech supply chain braces for a tough 2019 with early cutbacks. This is just one company right now. We've seen many companies that have engaged in a contraction in some way, shape, or form, okay? This is just one. We've seen the GDP numbers that they said they're going to have to pull down this year. Then we've seen the other reports out there that have shown us anywhere between just under 2% GDP as well as anywhere between 3 and 4%. So I'm getting a lot of numbers on that. The estimations are much lower than what they tell us will be approximately 6 to 6.5% for 2019. We'll see. I don't know where this is going to go, okay? I don't predict the future. I don't give financial advice, but this is where we're at today, right now, for China. Now, we just had this major flash crash that took place in China. I did a video about it, and this article here is from November of 2018. I thought it was really important to look at this to see what happened in the future. Now, what we can see back in October is this. A wall of onshore debt worth tens of billions of dollars issued by Chinese property developers is due to mature next year, sparking concerns over defaults at a time of economic slowdown and tightening liquidity. China's property market is a bedrock for growth, and economists fear that signs of distress in developer debt would send ripples through the financial system just as other problems are mounting. They're talking about the trade issues, they're talking about the issues with the banking system, and so on. However, what happened right now was very interesting because there was a flash crash that took place, and many had suggested this was the cause. So, could that same thing happen in European markets? Absolutely. Could the same thing happen in the US markets? Oh, no, not here. Not in the US. It couldn't possibly happen. Nothing bad. I mean, everything's great again. Well, couldn't be further from the truth. So what we're looking at today is the same old, same old. You have central banks trying to prop up the system in an experiment that has never been done ever in history. All the central banks clearly are in communication where one of them has to be printing at all times. Here, we finally had a little bit of quantitative tightening that was taking place as of 2019. It was supposed to go into the negative. All right, it was finally going to be into the negative on their growth of their balance sheets. And then China reacts by putting a record amount of money out there. This is a failed system and people don't realize it. They're talking about this or that, the unemployment rate. My goodness. When I hear about the unemployment rate, I don't even laugh anymore. I used to laugh. Now I'm just sad. I'm really sad that people haven't figured it out yet. Then you have this here. China's soybean imports show American farmers have more to fear than the trade issues. China's soybean offtake is about 37% lower than during the first few weeks of 2018. We have a problem. You know, they didn't even import any in November. They said they would. A few months prior to that, they said we're going to import more, we're going to do our best, and that was supposedly positive. The market went up. And then they didn't import any in November. This is what happens. They say stuff, they talk big talk, and then the actions don't actually factor that in. It's really weird, but doesn't matter anyway because the market only cares about that day. They only care about that one single trading day. They don't even care about the next day or the next week. Janet Shake It Yellen says it's very possible that the Fed has made its last rate hike of this cycle. So she believes that this is what has happened. But why? If you can tell me that everything is fine, why would you not want to increase rates? Why would you not want to make the economy even stronger? Because it can't handle it. We are late in the cycle. You can even ask the Federal Reserve themselves. They believe it is late in the cycle. Now they think they can actually slow it down. down. They think they can actually create what they call a soft landing, but this doesn't happen. It never does. And here we are where Janet Yellen, Ben Bernanke, Powell, Greenspan, they've basically all said that the Fed can handle it. Don't worry about it. But it doesn't happen like that. Of course, here we are today, 2019, where the Federal Reserve has been engaging in their Fed speak to keep the markets controlled. They have their forward guidance. And meanwhile, they've been holding on to over $4 trillion worth of garbage. And that's really what it is. It is garbage. But we're not allowed to say that. People get offended and so on, but whatever. And last but not least, if you want the financial education you were not taught in school, these 2 books have everything that you need. You can get all the data from the foundation history asset classes. I talk about China and the US's relationship. I talk about everything in these books. So check them out at the link in the description. If you want the audiobook, you can get that at themoneygps.com.